Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Thursday, August 22nd, 2013. Well, a continuation of the trend to the upside today, and a candle that hasn't changed the previous trend that was in force, and that was a candle with a higher high and a higher low. Today we've seen the market take out the high of the previous candle, but also take out the low of the previous candle, and because we don't have the opposite configuration of trend, we can't say that that trend has actually changed to the downside. A very, or in relative terms, a very large white-bodied candle in terms of the two previous trading days, and suggesting that the buyers have found some upside momentum. And they've made a substantial amount of net bullish progress when compared to the previous two trading days. In the context of days prior to that, though, certainly not a substantial amount, and in line with some of those candles, and certainly not in line with this large candle. But in terms of the very short time frame, the buyers seem to be coming back into the market in net terms. Unfortunately for the buyers, they weren't strong enough to take out the strong resistance level at 1380, and for the last 5 consecutive trading days, the market has failed to test or close above the 1380 level, and it is a very, very important level if this market is going to move forward. If we do see a bullish breakout up above there, the market may be able to build enough momentum to test to or above the 1400 round number level, and a test above 1400 in a bullish way could see the market testing up to around the 1432 level, but we can't preempt the market. But this is a very, very solid area of resistance and very, very important. Now, by the same token, the market also tested roughly down to the 1350 level of previous resistance that has now turned into support. So we have a market that's congesting, and in a minute we'll look at what type of a congestion area it could be, and it could be a significant one. But with today's candle, the buyers have actually closed with control, and stronger control than we've seen them close with in the past week or so. So perhaps the buyers are attempting to build some momentum. And we also have this large shadow on the bottom of this candle highlighting the sellers losing commitment down around the 1350 level. So suggesting that the buyers may be the stronger party here and may be building for an attempt above the 1380 level, but such a strong level, the likelihood of it happening is not great. In terms of the Fibonacci extension, and because we're still technically in a first time frame uptrend, we are examining the relationship of this first time frame uptrend to the previous time the market is trending up. And here today again, for the second consecutive day, rejection from the 38.2% level. It does suggest potential for a change of trend, but we have seen the buyers take control of this market today, so not as strong a likelihood as the previous day's trading. So as much indecision whether the market will have the ability to change the trend. In terms of the Fibonacci retracement, not giving us a lot of information here. We are looking at the relationship of this first time frame uptrend to the previous time the market is trending down, and that was just a one candle downtrend, so not ideal for this type of technique. But significantly, once again, the market has been rejected from above the 78.6% level, but the bullishness in this market does suggest that there is a possibility of the market trading to higher levels. The market almost tested to the 100% level, and that will be an area to watch for tomorrow's trading if the trend does continue. If we break out up above there, possible test to the 1404 level, or obviously the 1400 round number level will come into play, and the market could just poke up above there, but no certainty that the market will be trading up there. We are bound between strong resistance overhead but strong support down below. Now, if you recall, yesterday I suggested that there was some type of a pattern that was developing, and it looked like it may have been a flag type pattern, and there was a possibility of it turning into a pennant, and that's pretty much what we've had. This is a pennant type pattern. Pennants tend to be quite small, they form quickly, a very tight trading range, which is what we've got here, and we are now looking for a potential breakout in either direction. They tend to be continuation patterns, and that would be in line with the market trading above the clouds, so having a bullish market in the long term time frame, and then breakout being up above here. So we're looking for a close up above the upper barrier. What I'd like to see is a bullish close as well to give us a greater level of confidence, and if that does happen, the target would be the trend leading into the pattern, which probably would be from this previous breakout here extended up, so giving us a target probably roughly up around the 1418 level. So obviously the 1400 round number level would come into play, and meaning we may not reach that target, so it may not be a good trade to take. This pattern could also be a reversal, so need to be aware of that. The target would be the depth of the widest part of the pattern projected down, which will give us an area down around the top of the cloud, and that would provide very solid support for this market if it does occur. But the more likely breakout would be to the upside, with the market trading up above the Ichimoku indicators. Now, in terms of Ichimoku, obviously a bullish market in all three time frames. The market's trading above the cloud, above the Kijun-sen, the pink line, and above the Tenkan-sen, the green line here. And this is all suggesting that if we do see that breakout, it will be to the upside. But a lot of uncertainty in this market at the moment, with the market congesting, trading above solid support but down below solid resistance. So a lot of indecision in this market at the moment. Let's wait for a confident breakout in either direction, and as I've mentioned, what we're looking for is a breakout to the upside.